Good afternoon. Hello and welcome. Live from New York City, I'm Campbell McCrary from Amvest Capital. Thank you for joining today's webinar featuring Cyprium Metals Limited. Cyprium trades on the ASX as CYM and on the OTCQB as CYPMF. We're happy you could join today's live webcast. Replay will be available shortly after the event. Your questions are essential. Please submit them in real time using the Ask a Question tool, and we'll do our best to address them during the session. That's highlighting the Ask a Question feature there. Feel free to share this event with colleagues, highlighting the share button. At the end of the webinar, we'd love to hear from you. Please take a moment to submit your feedback, and we will provide to company management. Amvest is a New York-based specialist investment management firm focused solely on the natural resource sector. This webinar is for informational purposes only. Please, it does not constitute an offer to sell or the solicitation of an offer to sell or buy any security, nor should it be relied upon as a basis for investment decisions. Joining us from Cyprium Metals today is Executive Chairman Matt Fifield. Following the presentation, we'll dive into the Q&A session where we'll address your questions. Feel free to send them as we go, and I will now turn it over to Matt. So welcome to the show. Thank you.
Thanks, Campbell, and thanks for having me on board. So I'm Matt Fifield, and I'm the Executive Chair of Cyprium Metals. Today, I wanted to share with you one of the most exciting stories that I've had a chance to be a part of, companies that I've had a chance to build. So Cyprium represents the next generation of copper supply. If I could have you take one thing away, we are progressing the brownfield restart of the nifty copper complex in Western Australia. So I'm going to approach this conversation like it's the first time that you've heard of Cyprium. I'm going to go through our plans, our assets, the company, people, give you a sense of what's about to happen here, but also know that I'm going to be making forward-looking statements, and there's some important disclaimers in the back that you should read carefully. So first, let's go through. This is the brownfield restart of the nifty copper complex in the Patterson region of Western Australia. I want to start with the assets and the plan. Okay, there is about 1.6 billion tons of copper left at Nifty. It's a prolific mine that's already produced about 1.6 billion tons. And there are two processing plants on site that are next to sufficient ore to feed them for years and years to come. We've got permits, infrastructure. We need to refurbish the plants, feed them with similar ore to what they've already processed. And we're doing all of this in Western Australia. So Western Australia means we have access to the very best supply chains, the very best regulators. This is a low lift compared to other jurisdictions, and it's enabled us to attract phenomenal partners in Glencore and mining contractor McMahon, and also to recruit some of the best executives that I've ever had a chance to work with. I'm not going to spend much time today talking about the right time. Let me just say this is a great time to have the next generation of copper supply coming online. Okay, let's talk a little bit about the company. On the right-hand side of your screen, you'll see a map of Western Australia, and you can see that the Nifty Copper Complex is located in the Patterson region, east of the Pilbara near Port Hedland. That's where we would export any concentrate from Nifty. We also have another large project called Maroochydore, also in the Patterson region. Both of them are sediment hosted copper projects, and they're both really big, about 1.6 billion tons of copper in each. Grades are good, well above 0.5%. Nifty is averaging about just under 1%. and Maroochydore is, the high grade zone is at 0.7. In terms of the company itself, we're about $100 million enterprise value. We have $25 million in cash. We're carrying legacy debt in the form of convertible notes from the original purchase of Nifty and Maroochydore. And then we have a $40 million senior secured loan with Glencore, who has provided this loan to help us bring concentrate to market. Shareholders, we have a strong, dedicated group of institutional shareholders. Management, including myself, are cash investors to just a little bit below 10%, and our institutional book is around 50 to 55%. So let's talk a little bit about Nifty. So Nifty was discovered by WMC in 1993, and it was originally developed to process copper oxide ores into copper cathode. That is, those are the sheets of plated copper that you would normally see. The process to do that is to dig the ore up, grind it up, put it in a big heap leach, and then put leaching solution across the top. It draws out the copper, and then you process it into copper plates through a solvent extraction electrowinning, or SXEW plant. What you see on the right-hand side here is there's about 17 million tons of heaped material that contains abundant copper. About 90,000 tons, or roughly 180 million pounds of copper, contained still within those heap leaches. So what we were going to do is break up the old solution channels, re-leach these in place, and then put it through a refurbished plant. This is our first project at Nifty, and it's a fast track to cash flow. It's a relatively low lift. We published a PFS in November, and that PFS in November says that our capital is in the range of $30 million Australian, a little bit of working capital to get that up and running, and we would be producing 6,000 tons of copper a year. That's roughly $80 to $90 million a year of revenue for the company, and it's roughly 50% margin business. So it becomes extremely economic to effectively recycle these tailings and heap leach in place. And that's really our starter project. The big value driver here is, as I said when I opened, there's about 1.6 billion pounds of copper left in Nifty. If you look in the center of your screen, what you'll see is it's a sediment-hosted, I think it's a little bit like a coal seam. So all of the copper appears within a sediment basin of dolomitic limestones. And so the copper is exactly where you think it's going to be. That contains about that 1.6, the vast majority of that 1.6 billion pounds of copper. Next to this old mine is an existing concentrator. And so we're going to go ahead and put together a surface mine to mine the remaining copper sulfide ores and produce concentrates through a refurbished concentrator. The PFS that we put together shows us making 36,000 tons of copper a year. That's a significant amount. It's a roughly $200 million EBITDA business, Australian. And our refurbishment costs and startup costs in the PFS are about 2.25 times our average annual EBITDA. So again, extremely economic. I would note that both of the Nifty processing plants and the plans around them have camp, infrastructure, power, water, quite a lot of spent capital that make them quick to market. And we also have advanced permitting on all of them. So as we sit here today, what we're looking at is how do we bring these to market as quickly as we can. This is the slide in front of you is probably worth studying. The projects here are very large scale. To give you a sense of the size of Nifty, this is the largest pure copper reserve in Australia from a brownfield mine that is not owned by BHP. So companies with deposits of the same size of Nifty are generally much, much larger and well advanced. This is a company making deposit for us. And so what you see is $4 billion of EBITDA in the PFS, and importantly, 20 years of life. A lot of the copper in Australia ends up being short life, high grade, but not a big reserve tail. One of the true strengths of Nifty is there's so much copper in the ground next to these plants that you have got 20 plus years of life. What's interesting about that is that that combination, as I said earlier, has really attracted a first-class team. So Glencore is our offtake partner, and they're world-class in their ability to market cathodes and concentrates. We can also feed these concentrates into the Mount Isa smelter within Australia, creating an end-to-end Australian copper story. Second, we've recently announced a strategic partnership with McMahon's, who's a world-class mining contractor. And at the moment, they're getting their hands wrapped around our PFS, and we're developing very pointy execution plans for 2025. We have a first-class executive team. I have been involved in mining my entire career. I've worked on 9 mine startups and have done a number of public turnarounds as a hands-on investor. Louis Chait, ex-CFO of Glencore Copper, Colin Mackey, mine builder, 8 mine startups, and lots of turnaround experience inside Rio and working with Thiess. We have a first-class board with finance, operations, and all sorts of acumen helping us make this transition from studier to production. And that's really what the story is. When you have the next generation of copper supply, you have this kind of a market, move quickly. So what have we done? How have we moved? Well, last year was a big year. I moved into the executive chair role in February, and since then we've refinanced the balance sheet. We put out 2 mineral resource statements. We put out a PFS. We have executed offtake agreements, and then this year earlier we have put in place the strategic partnership with McMahon, and it's all of those kind of series of activities that you would expect for us to be going through to build this mine. So one of the things that is also important to know is that as we put in place the offtakes, we also managed to carve out the ability to go through a sell down of Nifty, and that's an important financing tool for us. The company does have a little bit of debt with it, and so we need to get to cash flow relatively quickly. We have that starter project, but then to break down the larger capex, we also have the ability to offer a third of the concentrate marketing and rights and joint venture interests in Nifty. As we get clear on the execution plan with McMahon and take our PFS and notch it forward, we're going to be talking to the market. And again, that's a great time. We're in the right time and environment to be looking for those kind of strategic partners that are looking for growth out of stable jurisdictions, near-term copper units, both on the concentrate and cathode side. So it's very exciting. I would also say we have some expansion potential. I won't spend a lot of time on it, but I mentioned Maroochydore is our next project off the rank. It's about 70 kilometers by dirt road from Nifty. As the Nifty concentrator gets up and running, as the Nifty cathodes are up and plating copper, we have a whole nother Nifty size deposit just down the road. And so we're getting our arms wrapped around that as well. So it's an exciting story. There's a lot that's going to happen this year in 2025. And thanks for your interest.
Great. Thank you. Are you ready for some questions?
I'll take them.
All right. I note the accent. You're maybe not from Australia. How did an American geologist get to Australia, and how did you get involved with Cyprium? And for that matter, get involved in something in Western Australia. So a little bit about you.
Sure, a little bit about me. So I started off as a geology student, then worked in investment banking, doing mergers and acquisitions in metals and mining. I was one of the founding shareholders of Foresight Energy. It's a very similar story in some ways to what we have here. Foresight Energy was a multi-mine build in a short space of time in central Illinois around underground coal mines. And so it was a fantastic experience. It was very interesting. As that reached its maturity, I left Foresight and the Klein Group, and I moved to Australia, where this is a center of excellence for mining and a lot of what I've based my career on. In 2016, I joined Pacific Road, and we had a number of public companies that since my joining, we went from active to passive, from passive to active, very hands-on, and working from the board and with management teams to help bring them to fruition and turn those around. And in 2019, 2020, when the Nifty asset was sold, we took a very close look at it. I became a cash investor when Cyprium bought it. And then as Cyprium went through, I call it a turbulent past from 21 to 23. In 2023, I stepped in and then have been very pleased to be a part of this story from there.
Could you dig in a little bit more about your shareholders and shareholder base? And I do see Pacific Road is there, and you came out of Pacific Road, so maybe there's a connection.
Yeah, look, I'm very personally invested and invested with Pacific Road as well. So I'm a cash investor here and aligned with shareholders around that. It's my single largest personal investment in terms of funds deployed. And then next to us, we have some excellent shareholders. So we have a 19.9% shareholder called Flat Footed. They are a very quiet group that is happy working through asset-heavy turnarounds. They're a long-only fund based out of the U.S., and their sort of legacy genesis is Julian Roberts and Tiger Cup Group. We have a couple of substantial shareholders. We have here in Australia, Paradise in their Opportunities Fund, and it's a tremendous shareholder that's been here for a long time and sees the long-term value in Nifty. We also have a couple other shareholders in North America that have come in recent rounds and really, I think, have embraced the change philosophy and the speed with which we're moving. We've been very active in repositioning Nifty and bringing this towards cash flow.
Could you go through a bit about the history of the asset and who was bringing it in, who had it in production before, and what wrapped up production there, and
sure.
How were you able to get a hold of the asset? Such a good term.
It's an interesting story, Campbell, because Nifty has been around for a long time, right? It was discovered in the mid-90s by WMC and put into production, as I said, to take the copper oxide ores and turn them into copper plate through SXEWs. That was built in the late 90s and then run in the 2000s as straight resources. So there's 220,000 tons of copper. That's 500 million pounds of copper produced from SXEW. And then eventually the copper oxide ores ran out. And then there was a lot of copper sulfide left. And in particular, there was a very high grade area underground. And so they built an underground mine to access that very high grade area underground. And that ran comfortably from 2008 to 2015 and was produced about 500,000 tons. So a little over 1 billion pounds of copper during its life as an underground mine. Eventually that high grade area ran out of high grade, and the mine as an underground mine became uneconomic, and it shut down, and the underground works were later abandoned. So Nifty went through this period where it was very successful producing copper oxide ores. It was successful in producing sulfide ores and concentrate from the underground. And then my experience has been that it's very hard when you sit in a room full of underground miners to look at something and say, oh, actually, this now needs to be a surface mine. So it went through a turbulent period where they were looking for higher grade ore but couldn't find it, and it just hit the end of that underground life. That's effectively what we're doing here, Campbell, is we're going back and we're saying, oh, well, what about the 1.5 billion pounds of copper that are left? Let's mine that using a surface mining technique, and you have all the advantages of all the installed infrastructure to make that happen. So at the end of its underground life, it was owned by a company called Metals X. They sold that to Cyprium, and then Cyprium took a little while to find its feet, and now I think we've found our feet and are on the way.
What additional permits might you need?
So we have a lot of permits in place for our life of mine plan for the open pit. About 94% of the projected waste is going to be put on areas that are already permitted for disturbance. It's an active mine site, so it's actively regulated by DEMIRS and DEWIRS under the Western Australia and Australian Mining Code. And so what we'll need to do is we'll need to amend our permits, our mine operating plans to reflect what our actual intentions are on site. It's not new permits per se, it's actually amendments of the existing permits on site. And we've been very successful as Cyprium in going through those amendments. So today, to restart the copper cathode, we're awaiting one final sign-off from the state of Western Australia, and then we'll be ready to commence refurbishment and production from the existing heap leaches. And then what we really need to do to finalize the amendment of those permits is we need to do the work that we're doing right now with McMahon to look at what our exact startup sequence would be in the open pit, and then go to the regulators and say, this is exactly how we plan to do it. So we're following a pretty logical set of steps. We've been through a PFS, it gives us a sense of what's there. Now we're working with real life practitioners to create real life plans and put them into motion.
Can you dig in a little bit more about your relationship with Glencore and McMahon?
Sure. So Glencore has the offtake for both copper products we would produce. One is those copper cathode or copper plate, and the second is copper concentrate. And they have the right to market the copper products as available from the Nifty mine. And so we have a marketing relationship with them. Similarly, we have a financial relationship with them where they're our senior secured lender, and we have a $25 million US loan against all these assets, first fixed and floating. So that's our relationship with Glencore, and it's a positive one. If you think about what Glencore's motivation is, they want to see more copper supply for their trading business. They want to see more copper supply in Australia for their domestic smelting business. So we're very aligned on creating success conditions at Nifty. And that's part of why we were able to carve out the ability to sell a portion of Nifty in a joint venture to a strategic investor. Secondarily, with McMahon, we are at the beginning of that relationship. The intention is for us to have a life of mine contract with them where they would operate the whole of mine. And so we're going through right now a transition where they're working through the PFS and coming up with execution plans, improving on the work that we had done and bringing it into real life executable mode. And one of the things that's interesting, Campbell, is because it's brownfield, a lot of times there's what's happening on site, and the as-built environment is really important. So McMahon's also establishing a presence on site, which will help us accelerate that kind of differential between what's actually built and what do we need to refurbish and go ahead and do. So brownfields are different than greenfields because you have to deal with that gap between what's there, which is usually something really positive to work with, and where you need to get to, as opposed to building something theoretical and on a clean sheet of paper. Does that make sense?
Maroochydore, where does that fit into your plan? Is it could it ultimately be part of the complex?
Yeah, it could. I mean, it really could.
Put any money into it in the time being, or do you have your hands full?
Look, the first thing is for us to, with some debt on the company and some near-term prospects to get things moving at Nifty, and with the copper backdrop that we have, we're going to create the most value for shareholders, including my shareholding, by executing on the ground. That's our number one priority. But it's really clear, Maroochydore is only 70 kilometers, 80 kilometers by road, and it's in the Patterson. It's that same nifty copper, sediment-hosted copper mineralization style. So it's very familiar from a metallurgical and geological perspective. And so we're getting, look, it was lost in all of the transition from underground mine and the death of the underground mine at Nifty, and not a lot of time was really spent on Maroochydore. So the resource statement that we put out recently was the first one that had really been done in 10 years. And we looked at it with a fresh set of eyes and said, wow, early on, people were just like how Nifty started. They were looking for that shallow oxide ore to start up a SXEW. But actually, there's a phenomenal and massive sulfide ore body that sits there. And it's got the grade and scale to be a mine. So now it's up to us to say, how do we box that in? How do you fit it? Can we sort it and ship it to Nifty? Do we need to build something in place? But, look, we have so many advantages from same type of ore, same region, ability to drive there from our mine site, that we're compounding our advantages in the Patterson and looking at that hub and spoke system.
You have your 2025 objectives.
Sure.
I'd love to talk more broadly into a forward-looking 2-year timeline. As North Americans would say, someone eventually would raise his hand in a room and say, so when are you going to be in production, right? Kind of reduced to that. I know, it's a work in progress, but maybe give us frame a narrative around some expectations.
Yeah, look, I mean, I wish that I could, so just understand where we are in the process. A lot of people like to jump out and say, we're going to produce an XYZ and set these targets. Our journey right now is we're bringing real life practitioners to a real life problem that and a real life opportunity. It's got permits, infrastructure, the step you need to go over to get into production. There's not a lot of unknowns. It's actually an execution story, right? So what I'm asking for, and I've talked to shareholders about this, and they've said, tell me when, Matt, tell me when. And actually, what we're asking for is just a little bit of space so that we can get our hands wrapped around this on an execution story and be very powerful around how we move forward. In the past, we've said that we think that we can get cathode up in 25 and concentrate up in 27. And that's been something that we've been pretty consistent about. I think that that's still a possibility, but I do want to move through this kind of, you could see on the slide in front of you, onboarding of McMahon. What that is the difference between the study world and the real world, right? Some of what we need to do is move men and material in a certain sequence. So their views are invaluable in sharpening our execution plans. So I think that in this quarter coming up, we'll be able to really state with more definition, exact timeframes.
But you do have a plan as of as of now. So given the current plan on the presentation,
Yeah.
what would it cost, and how long would it take to, if you were shoveling tomorrow? Take us through the base case here that clearly will be tweaked and improved.
Right. So the base case here, I think if you look, this is an interesting slide. It's a data heavy slide, and it's a lot to kind of look at. What you can see is what we know is the concentrate project is our big value lever. There you go. Sorry, I hit push. So I'm on page 11 of the deck. You can see that the concentrate project, it's got the duration, it has the scale, and it's economic, right? You're building a 20-year asset at a little bit over 2 times EBITDA. So it's financeable. All of these things, it's brownfield permanent. I mean, there's so many things about the concentrate project that are interesting and attractive, but we need to check all the numbers with McMahon to make sure that, basically McMahon is contributing and leading our BFS. And we're just in that spot between taking the PFS and determining the BFS scope and then moving forward on the BFS. So we should have a BFS on the concentrate project this year. Okay. And that's pretty logical. In terms of the cathode project, what we're looking at is, does it make sense, depending on how fast you go on the concentrate project, to do cathode and concentrate at the same time or sequentially? And that's the discussion that we're having right now. Sequentially means for very little money let me just go back to this slide. The CapEx here is $20 million, $21 million of refurbishment costs, $9 million of first fill and contingency, and then sort of the pre-operational run-up costs of about 15 million. Those are the components. 45 million Australian times 0.6, like 27, 28 million US. Very achievable even for a company of our scale. The other thing that's very interesting about the cathode restart is that it's extremely low complexity. This is a total 40-person-ish type operation, with 20 people on site at a time. We're not mining anything. We're rehandling material on the heaps. So it's a very nice first step for us to get started. And so, yeah, I think one of the core things we're thinking about right now is sequential, do this fast track, get the other one right, or simultaneous. And, we'll have more information on that. But if we started the question that you asked, Campbell, was more around timelines. If we started the cathode today, we would be making, if we started the cathode refurbishment today, the refurbishment of the SXEW, we expect that we would be making copper this year. And there's quite a lot you can see from the picture, the lower left under where it says Nifty SXEW, the ponds are full. There's a lot of copper flowing through the system. They've been sitting and kind of, leaching in place and circulating free copper here for a decade. There's a lot of free copper that can drop out of this pretty quickly. And we feel like our estimates on 6,000 tons a year, the way we approached the project was, let's be really conservative. Other people had plans to produce a whole lot more from this, and so we said let's be really conservative here, and almost like, what does it take to achieve the strategic objective of revenues, overheads covered, starting to pay down debt, making money for our shareholders. So this is still a very logical project for us.
Do you have any regional exploration in mind, or are you just focused on technical advancement and infill drilling?
Well, at the moment, so we have a huge footprint that's held by joint venture. So I didn't even get into that in this area. We have a joint venture with IGO, which is a multi-billion-dollar Australian mining company. They have a farm-in through our these are all advanced projects that are held on mining leases or state agreements. And those state agreements and mining leases, we still own 100%. The halo that sits around this, all the advanced exploration that sits around Maroochydore and Nifty, is in a joint venture held with IGO, and they're in the process of farming in and doing exploration each year to find the next Nifty, to find the next Maroochydore. So we have participation in that exploration, but at the moment, not the burden of ownership and cost, which is really the right thing for a company of ours. I think that one of the things we're trying to do, as I thought, Campbell, about the questions you're asking, is we're really trying to set expectations that we can meet. And I know that can be frustrating because you want to know, hey, you're starting on Thursday, and therefore 9 months from Thursday, we're going to see copper coming out of this. We want that too, right? We want to, and if you look at how fast we are moving through the things that are necessary to bring something into production, it does take a lot. Again, this will be the 9th mine startup I've been involved with, and you have to make sure that you're really ready to go, because you can put yourself into a place that you're not ready to go, and then you have to deal with that. So there's tension between being ready to go and going, and we feel that every day, and also around setting expectations for shareholders and then delivering on them. We feel that as well. But look, I'm very pleased with how this is going. We've got, again, the right folks. We have a very simple plan. Let's refurbish 2 plants next to abundant copper resources, that are in Western Australia and permitted. Got great partners, great shareholders. It's a fantastic experience to be a part of.
Right on. You're in Australia at an Australian company, though you do have the OTC QB up cross quote in the United States. Do you plan to dedicate some time, either in person or digitally, to the North American and European market? How much have you done before? You need to be telling your story, so maybe assure people how you're going to tell others.
Sure. Yeah. I mean, look, we had last year was a busy year, and I think what's interesting is that we have restated the resources on Nifty. We put out the first heap leach MRE. We put out the first Maroochydore MRE. We put together a PFS. We've sort of brought together how are we going to execute this with who. So all of the elements that we needed to create, and we've extended the balance sheet, given ourselves room to have this all come together. And so all the things that make this an interesting story have really come into place. And so now there's quite a lot of work internally to be ready to start talking to people more regularly externally. So I think across 2025, you should expect to see more and frequent communication from the company to its shareholders all over the place.
All right. Thank you. Thank you, everyone, for joining and participating. Please send in any feedback that you have, and please share either the webinar link, or the link that you use to log in is the same one that'll take you to the on-demand replay in a few hours, and post it for those of you who do that sort of thing. And I'll pass it back to you, Matt. Perhaps, at least around here, we focus on upcoming milestones. So say this, give us why should we be paying attention in the next 8 months? So.
Well, I mean, man, in the next 8 months, you should expect to see quite a lot of forward movement on our ability to deliver these projects to shareholders. It's what we're working on every day. And if you look at what's happened in the last 8 months, I will try to see if we can go that hard over the next 8 months. In fact, I expect that we will really make a dent in what's happening. So across the next 8 months, you'll see significant progress, if not delivery, of a BFS on the open pit. A lot of clarity on timeframes and execution on sequential versus non-sequential startup of the cathode plant. You'll see advancement on our financing and strategic partnership opportunities, and you'll see our relationship with our partners continue to blossom and yield, better results for shareholders than where we are today. So it's going to be an exciting year, and I hope for the shareholders out there, thanks for your continued interest and support, and thanks for showing up today.
Thank you. I think from the North American perspective, especially, this is a great time to find out about this stock right now. So it's hopefully people get on board. So thank you very much, Matt, and we'll speak and see each other soon.
Okay, thanks, Campbell. Thank you very much. Take care. Bye.